Michael Price, is value investing dead?
No. To the contrary, I think it's, if you look over solid value investors from the 07 to today time frame, you're basically back to whole. Guys who have done really pretty solid job because they didn't sell companies in 08, 09, early 09, because they didn't have to, because their balance sheets were fine and the companies made it through. They got really oversold in 08, no question, in early 09. But solid value investing is, in my opinion, the way to go, Pimm.
Buzzy, what do you think? Value investing? I mean, because people take a look at fundamentals and they kind of shrug now and they say, you know what, you've been losing money. You saw what happened in 08. Is that really a good way to...
Michael's the investor, I'm not. But my only comment on that is that, you know, stocks are like water, and you can tip them this way and tip them that way, but eventually they find a level where they should be. And I think, you know, what Michael is pointing out, that stocks get oversold in 08 and the beginning of 09. But if you've got a real company that has a franchise, that's not over-levered, that has cash in the bank, they're going to come through it. And guess what? If it went from 30 to 15, it's going back to 35. It's just...
And I just want to add something.
Yeah.
Index funds. You go back to 2000, and I love Jack Bogle. Jack is a wonderful guy. But I got to tell you, the index funds haven't worked at all. Stock pickers who really do their work, understand their companies, and stick with clean balance sheets and buy them cheaply, that's the way to make money in the market over long periods of time.
Well, but isn't that a big change? Because, I mean, haven't people been taught, you know what, you've got to, most managers, most active managers, right? We've got the Burton Malkiel, you know, the random walk down Wall Street. We've all been inculcated with that. The idea being that, what, 95, 98, you know, % of the managers can't beat the index. So why 99. Try? All right, 99.
No, I think you can do it.
You know, why try and just take it so that you can actually avoid all those fees and just go ahead, buy an ETF, buy an index fund.
Well, the trick is finding the good managers. There's a lot of mediocrity out there. You know, find the right prices.
No.
Michael?
Well, I think you can do it yourself if you take some time to get trained and do some research into finding solid value managers with long-term track records in no-load funds or very low-load funds.
How do you go about finding one? What kind of questions do you ask? Because I was talking earlier to Alan Lance of Lance Global, and I said, do you ask someone for their worst pick?
No, forget that. I think you look at the top 5 positions. If the guy says he's a value guy, take his top 5 stocks, where he has, you know, 10, 20, maybe even 30% of his money. And, you know, why do you own them? Where's the value? Where's the discount from its intrinsic value?
Buzzy?
Right?
Well, how does the public do that, Michael? How does the guy in the street
Well, it's very tough. Yeah.
Right, because they end up relying on whatever is being offered.
You have to look at what a fund has done over a longer period of time. How's a guy done in the worst possible markets?
Right.
You mentioned guy, meaning the fund manager, not necessarily the fund. Right. Yeah, but the person in charge. Right, I understand.
But you have to look, and, you know, if a guy got killed in 08, but made it back in 09, and you're close to being even, then he's a good manager. If a guy got killed in 08 and then lost money in 09, that's not a guy I'd want to be with. And, you know, everybody makes money in hot markets. The trick is not to lose money in bad markets. And that's what I would
And stay away from leverage.
Stay away from leverage.
You can compound money in the teens without leverage.
You don't need leverage.
And the leverage just really increases the risk.
It's the dirtiest word in our business.
Leverage.
Yep.
What about going short?
We basically don't really do it.
Buzzy?
We love it.
You love it?
Yeah, but I think, you know, there too you have to be careful and know what you're doing. It's much more difficult to make money on the short side than it is on the long side. You really have to do work and know your companies.
All right.